Hello, folks. Welcome to Pro Trader Strategies. We're an educational company. I'm going to be talking about the markets, the economic data, all of these things going on around the world and how they impact the markets with some of my market analysis. So if you're new, please smash that subscribe button so that you guys get notification when we're doing this. We're going to be doing videos at 11:30 Eastern every single day for the market commentaries. And also, there's a like button down there. Hit that as well because that really does help us out. And if you have any questions, comments, or anything else during this video, over there in the comments section, throw it out there. I'd be happy to make sure that you are clear of concept before moving on and shutting out of this video today. So please go over there and check that out. So like I said, my name is Eric Wilkinson. You very well may recognize me from mainstream media. I'm going to do those same things in these market commentaries. So without further ado, let's get on with it. Across the pond, the economic data is pretty light, to be quite honest. So let's just talk about here in the United States, because that's really what's moving the markets here. We got the core retail sales. Now remember, when you're looking at core retail sales, that's going to strip out energy or some of the more volatile aspects of that data point there. So we're going to take out the automobiles, and that comes in at negative 0.7. Expected to be a positive 0.4. They did revise last month's number up, albeit just slightly, but that headline miss is pretty big. And we've been hearing all of this noise about like the F-150, the chip shortages, and all of those things. That's probably impacting these core retail sales for these automobiles, folks. So we're seeing that number drop. But something we got to double check on that is the regular retail sales. Is it showing up there? And no, folks, it's not really. It's not being made up. It's still negative 1.3%, expected to be a negative 0.6%. So not getting the automobile sales, retail sales kind of waning a little bit. And then finally, we got the producer price index. Now, this is inflation impacting the producer, right? Now what we need to do is see if they offset that to the consumer later on this week. But producer price index coming in hotter than expected at 0.8%, expected to be 0.5%. And finally, we got a couple other numbers for the manufacturing sectors. We got the Empire State Manufacturing coming in lower than expected, 17.4, expected to be 22. Industrial production, though, coming in at 0.8, expected to be 0.6. The only real silver lining here is in that industrial production capacity utilization, meaning how much we're using these manufacturers. That comes in at 75%. So not full capacity, but very close to that. And business inventories, we're going to keep an eye on that because we want to see if the retailer is using that. And we did see that number come off, albeit a little bit. The National Association of Home Builders Index coming off a little bit, 81, expected to be 83, higher prices. Inventory is the issue there. All right, so let's talk about the markets. What's going on? Well, Hindenburg Research is back in the news again today, talking about a short in DraftKings. I'll talk about that here in a moment. But Hindenburg back on, and the Reddit traders, the Wall Street bets guys are all over this news. And as a matter of fact, just about everybody, they see Hindenburg Research shorting something, and I think that they're starting to jump in before it's really getting caught on the Reddit news there. Also, crude oil moving higher here today. That's about the only thing we're really going to see in green today, moving higher as, listen, lack of supply here, folks. And I got dogs trying to talk to me. They want out. They don't want to, they want to hear more about Hindenburg Research, I guess. So we'll try and get them to quiet up a little bit. And something's got to go wrong today, right? For instance, thankfully, the dog started barking in my ear and reminded me, hey, you got to hit that share screen so that everybody can see your screen today. All right, here we go. We've got crude oil moving higher, making a new 52-week high up into the 72s. Looks like people are talking $100 a barrel in crude oil. Why? Because if we aren't producing oil, if we're shutting down all of these, the fracking operations and things like that, that means that the supply is going to be shrinking, folks. We are one of the biggest producers of oil, right? Almost 11 million barrels a day. And that's going to continue to dwindle there if we start cutting back on fracking here in the United States. Bitcoin is in slightly higher territory, while the rest of the markets we talk about today are going to be in negative territory. Dollar continues its strength. That's going to cause a little bit of weakness there. Inflation showing up, though, in PPI. We're going to watch and see tomorrow in the CPI if that's starting to get passed on, those higher prices to the consumer. And that would really be a reflection of inflation, folks. Sometimes the producers will not pass that on. That's not necessarily inflationary. That's going to be more transitory. But as soon as they start passing it on to the consumer, folks, that's where it is pretty much here to stay. VIX is moving higher today as the broader markets are in negative territory. Yesterday, we were seeing the tech sector lead the way to the upside. Today, they are probably leading the way to the downside now. And Dow Jones Industrial Average also off 175 points. Everybody's going to be keeping an eye on the 50-day simple moving average, because keep in mind, the simple moving average gives us a barometer as to whether or not it is bullish or bearish, okay? If we get below that and settle below the 50-day simple moving average, that is more bearish, and people will start filing in to get out of longs or to add shorts to positions. E-mini S&Ps, after making an all-time high here, we can see that all of these, we're getting those same doji setups that we were talking about, where it's really feeling like we're struggling to rally. And I am still in the camp that equities, the risk right now is to the downside, folks. It's not really to the upside. We do continue to make higher highs, but with the lack of volume here, and we're seeing weakness in that lack of volume, that to me is more bearish than anything else. Remember, we're in summer markets. People are settling down. We've got the FOMC later on. Volumes are starting to suck out of this market. And when you see that weakness, that is really concerning. All right, and we can see that that all-time high was made overnight. So is it going to be something that chartists really look for? I think more and more people are taking credence in these overnight highs. So yes, I'm going to keep an eye on that as a high. I do believe, though, that we are going to try and print that during the day session. Is it going to be in the next day or two? Probably not, because I feel like the risk is to the downside here. So that would have to be really printed during the day session. All right, DraftKings, we were talking about this. Hindenburg Research released information on DraftKings saying that they started shorting this company. Why? Because of some nefarious things that might be going on here at DraftKings. If you think about it, all of these bookies, all right, there's bookies on every street corner in any city, basically. And what happens is, if you think about that bookie in that city who is part of the black market, really, well, a lot of those people in that city will probably wait towards their home team, right? Well, that means that local bookie is overweight, in a sense, one side of the bet. What they like to do is have offsetting bets. They want it even on both sides, and then they just take the juice in between. It's kind of like an exchange where they just take commissions and don't take any risk on that. Well, that would be ultimately what a bookie would want to do. So what has that person done when they've gotten overweight? Well, they're likely to go to somewhere like DraftKings, which is legal in most states, and offset some of their bets there so that they could have that hedge. Now, what is happening? Hindenburg Research is saying that is black market conditions, meaning that these people are accepting money from nefarious practices and legitimizing that. And if they do get away with that, then that is basically fraud, folks. So they will be in a lot of trouble. But I do believe that any one of these online casinos is probably seeing very similar types of practices with these people that aren't necessarily legit. Well, with that said, the market fell out of bed, but with that Hindenburg Research name in there, I think that that's gotten people to pile in there, knowing that it could be the next meme stock coming up. So with that said, we've got incredibly high implied volatility spiking in this underlying because of that news. And so with high volatility, we know the premiums are elevated. I want to take advantage of that. I am looking for this market to start looking to bounce here. Let me make sure I got my right pen on here. So I am looking for the market to make a little bit of a bounce. But if we look down here at the implied volatility, you can see we got a nice big spike in all of those premiums. That being said, that's an opportunity for me. I think the news is behind us. This market is going to get these meme stocks. Yes, we could still see volatility expand in here. We never know for sure if we have found the top in that volatility. So, but we know we are seeing that elevated spike. Therefore, I want to take advantage of those premiums because that can come out very quickly once this market starts rotating over. So I went in and sold some puts in here, get that bounce. I get directional move, right? If I get the directional move right, I sold some puts. That means I'm willing to buy it at that level. Now, if you're doing this in like an IRA or something like that, you're going to probably have to do this with cash secured puts, which means you're going to have to put up the amount of money it would take to buy that stock outright at your strike price, okay? So for instance, right now we're trading right around $47, $48 in DraftKings. If I sold like the 40 puts in there, I only have to put up $40 for every one lot or $4,000 for 100 contracts. Because remember, every one contract in the options is equivalent to 100 of the underlying. All right. So if you do a one lot option, that is a basket basically of 100 of that underlying. So with this said, DraftKings, I went in to shorter duration. I want theta to be on my side, right? So I sold the July 40 puts in there for $1.20. Theta decay is going to really start ramping up inside of this 35 days to expiration here. That's what we're working with in this July contract for DraftKings. And then if the volatility starts coming out, that even helps me more. So if I get directional move right, volatility coming out, I'll be able to get out of this trade rather quickly. It's already worked out in my favor because the market is starting to bounce as everybody's hearing about Hindenburg research. I think that is a catalyst anymore for anybody to jump on board to go in and start buying that stocks well ahead of the spike. So DraftKings is the only thing I really added. I'm still keeping an eye on a couple of other things to take them off, but at this point, I'm just going to sit on my hands right now. Toyota Motors, I was expecting to see a little bit more of a pullback. Some of these stocks that are related to automobile or transportation items that we saw didn't do very well to start having a little bit of weakness. Now, I got on that game, remember, on COVID when we were shutting down Lyft and Ubers and nobody was riding in those. I was jumping on the car store, remember the travel campers, all of those things. I think that they're a little bit overdone now at this point, and it's a good opportunity to either take profits, do covered calls on some of these stocks that you've let run out, because I think we're going to start seeing a little bit less of a parabolic move. I think we're going to stay in relatively tight range. So those are all always good opportunities to lower cost basis. You can check out my webinars on those, on how to do covered calls, cash secured puts, all of those things where I really dig into the details for you guys to make sure that when you're putting these strategies on, you're looking at them logically and why we would have these certain strikes or certain months that we get involved in when we're buying versus selling. So I break all of that stuff down for you guys so you can easily spot that stuff. All right, that's all I got. Like I said, hit the subscribe button if you're new so that you guys get notifications on that. Smash that or take that. Hey, if you like the video, also comment down at the bottom. I'll be happy to reach out to you, make sure we are all on the same page. All right, that's it then. Bye for now. Y'all take care now.